personally feel that one needs to first of all decide what is their full-time profession. I always say that either you're an investor or you're a gambler, or either you're a trader or you're a gambler. There is no part-time trader. Wow. So if you have something else to do between 9 to 3:30, then please don't trade. Because then you're nothing better than a gambler, because somebody who's actually a trading expert, it's a professional trader. So they would be sitting in front of the screen 9 to 3:30. They'll be following the commodity, forex, gold, etc. markets, even beyond that. And they will be absolutely glued to the screen. And they would know how to use indicators and all. So whenever somebody is talking about trading and I'm discussing and part-time traders, so I ask them a couple of questions and they don't have an answer. Basically, you're nothing but a gambler to me. And so it does not work that way. Even when you're looking at the investments and all, we do a lot of research and we talk to analysts and all across. And when we talk to them, on an average from my conversation with good number of analysts and equity research analysts and all, is that they will go through at least around 6 to 8 years of annual reports minimum and 4 years of con calls. So that is about 3 to 4 years. So 12 to 16 con calls. That is a quarterly conversation with the management by these analysts and all. So is somebody going through these 2-3 websites? Are they doing that amount of research? And then they think that they'll be able to outperform these fund managers and all. So again, there are problems as well, because mutual funds on an average have now not outperformed the market if you look at a longer time horizon, like a 15-20 years or so. Right. So then how do you go about investing? So we have a lot of ETFs and all these products today. So one has to be very disciplined, very diligent. One has to plan in terms of asset allocation. Say that, okay, 80% of my portfolio I want to put in equity, or 70%. 30% I'll categorize between a little bit of gold and fixed deposits and PFs and all of that for my tax purposes. In that 80%, what kind of risk I want to take. Accordingly, I can balance mid-cap, small-cap, large-cap, ETF and mutual funds. So I go for large-cap ETFs because mutual fund does not add value there. But for mid-cap and small-cap, I want to go for mutual funds. There could be certain stocks where, for example, I have a huge stake, huge for me, obviously, a good amount of chunk of money invested in ITC. Everybody is going gaga about ITC because it shot up from 200 rupees to 240. But what you don't see is that compared with all the other stocks and how they have increased, ITC is very bad the kind of performance they've shown. But the point is, my rationale for investing in ITC is that is more of like a fixed deposit kind of an investment goal. Because I believe the kind of dividend they're giving me, FDs are no good today. So everybody will have their own perspective, their time horizon, their reason for investing in a particular stock. If I tell somebody who's looking more aggressively to earn at least 12-15% returns to invest in ITC, they'll be very disappointed with my recommendation. So I think at a very early stage, one needs to bother more about the asset allocation part. And also when one gets into finance, you understand that asset allocation is more important than securities investing. That means that the percentage of money that you invest in terms of real estate, commodities, stocks, bonds, and within the stocks, small cap, mid cap, large cap, then if you further delve into the kind of industries and sectors, that becomes all the more important. And now we have a lot of ETFs, very specific ETFs to give exposure to different asset classes. So today it's so easy to build portfolios around these tools and ETFs and different products that we have available. You can invest in a Motilal fund and get exposure to the US Nasdaq as well. So one needs to focus more on this, but actually people get into the stock part first. Actually, how it goes about it is, you have to have a time horizon. So we do this in level 3, we do proper case studies about it. And you have to understand what is your age, what are your time horizons, what are the expenses you have in the next 2 years, 5 years, 10 years, what are your aspirations, which aspiration is more important, which is less important. For example, if I want to leave a big donation to a museum, so that is less important as compared to me being able to survive my retirement. My retirement expenses will be more important. So my retirement expenses worth of money, I want more in the FD form or more in the less risky assets form. But maybe the bequest I want to leave for my children. So that would be, you can probably take more risk on that. Because if they are competent, they'll earn it. If they are not competent, then no matter what you leave, they're anyways going to be splurging it on. Absolutely. So the personal finance is actually very personal. And people are not comfortable sharing their entire net worth, personal finance advisor, and then talk about all their liquidity constraints they have or any of those pointers. Say, for example, I'm somebody, I don't mind not earning even the risk-free rate. So even if I'm not earning 5.5% on my investment, I'm okay. But I don't want to lose a single rupee of my capital. That is my nature. I cannot change that. I want good amount of growth, but I don't want a 30% growth in my portfolio. I'm very happy with a 15%, 14% kind of a range, and I'm very, very happy with that. But I don't want to lose a single rupee of the hard-earned money. So that is my way of looking at it. Somebody could be naive and very, very risk-taking in the sense that they want to bet all. But that too could happen without thinking. So in fact, the first part of personal finance is the ability and the willingness to take risks, both the things. Ability is how much you can based on your financial situation, your current income, etc., your future expenses and requirements. But the willingness is about the psychological aspect. I have not come across, from what I've seen, it's generally people facilitating the funds, investments and all for the commission part. And they have not studied it the way they are supposed to. In terms of experimenting, in terms of trying to figure out what could be done, and there's so much more to do. The normal way of thinking is that everything that is supposed to be done is already there. Any idea that I have, you Google it up and you'll find somebody or the other is doing. So I would also resonate with that thought. But there was this book I read, How to Get From Where You Are to Where You Want to, by Jack Canfield. And there was a particular chapter about this particular aspect, that if whatever you're thinking or whatever you're trying to do, somebody else has already done the same, it becomes all the more easy for you because you know the track record, you know the history, you have so much of data, you know how to better it, you know where it went wrong. So you don't have to think that everything that has to be done is already done. And the problem that happens is again the misguidance. So nowadays I've seen there are lectures on how to get a startup idea, and first of all, how do you generate ideas? If it was that easy to generate ideas, the person lecturing could actually generate those 20 ideas. So there's again a lot of misguidance. There are a lot of wrong reasons for doing this. Tu beer hai, you'll come out with that particular series, and then based on that, the kids are very, very impressionable, and all they want is to be cool at a particular age and how things are. It is actually very, very alarming, I would say, when I deal with kids all the time and exactly in that age group. So it is very, very difficult with the kind of, they don't have that thoroughness in terms of research. They want to do it because my best friend is doing. The startup will always fail if you do it for that particular reason. The partnership is a bent to fall. If you're doing it because, I cannot take orders from somebody. So that is one of the very frequent reasons why people get into a startup. Because I don't want any boss on my head. The boss may not be able to mistreat you, but your client is going to mistreat you the moment something goes wrong. And in a startup, that is something very normal at the very, very beginning stages. You'll have to listen to your employees also. They will say that, I'm not well, I'm not going to turn up. Even if you're dying, you'll have to take care of things. Because it's your startup, it's your thing. So people get into it for the very, very wrong reasons, which creates a lot of problem. You've already put it so well. So basically the idea is you find your expertise, your niche first, and then you try to capitalize on the same. The problem is that people don't want to get into the depth of things. They want to get that niche first, which does not happen that the way it's supposed to be. For example, until, in fact, my college was done, and even after that, until I got into the profession of teaching and training corporates, until that time, I did not post a single picture or anything on social media. That is, again, a personal choice. And after that, I realized that no, I need to be in touch with the students, and with my experience, there is a lot more that I could probably do. And therefore, I need to be there and be available. Now, everybody wants to be an outlier, but the number of hours that it requires to put in, people don't want to do that. So one needs to read the book Outlier, for example. The problem is that if you want to find your niche, if you want to find that unfair advantage, first of all, you'll have to get a certain level of expertise in a field. And then you will be able to see how you can capitalize on that experience or on that learning or on that knowledge. You combine that with your experience or your exposure or an idea that you have, and then you capitalize on the same. But what happens is that people again want it too quick. That will not work. So one needs depth first.